and welcome. Today I am joined by Viraj Gandhi. He's co-founder and CEO Samco Mutual Fund, and we are here to discuss the launch of Samco Large Cap Fund. Welcome, Viraj.
Thank you, everyone. Thank you for your time. And thank you to Value Research for allowing us to put our views forward.
Good to have you here. Now, first up, mid and small caps, they have been in the spotlight with significant gains in the past, recent past, I would say. So, what factors suggest that large caps could deliver strong returns going forward?
Yeah, I tell you, there are some industry data points which requires highlighting over here. The contribution of CNX 100 to CNX 500, it is at its historical lowest level. So the contribution, which was somewhere close to around 48-49%, somewhere in September of 2021, has fallen down all the way up to 33%, the CNS large cap index of the CNX 500 index. Now, the contribution of mid and small cap, which was far below 50% combined put together, is now very much closer to 65 to 66%. Now, this number kept increasing till December of 2024, and we have seen some bit of correction in December after in January 2025. Now, the contribution of, if you see the AUM in mid cap index compared to the large cap index, it was somewhere close to 112% in December of 2024, has now come down to 105%. And small cap index, which was far below 50% somewhere in 2021, has risen all the way up to 92% somewhere in December 2024, and has now corrected to 86 odd percent. So we expect this moderation to happen in this particular year, and large cap to come back into foray because of this which is the abnormality that we saw in the contribution of large cap, mid cap, and small cap to CNX 500 in the last 3 to 5 years.
Right now, large caps, they're traditionally seen as steady performers rather than fast movers. So, how does your momentum approach identify opportunities in this segment?
See, this is exactly why there is a need of a momentum index in the large cap space. Because if you see the historical data of the last 20 years, the largest time frame in which a large cap stood in momentum was HDFC Bank, which stood in momentum for approximately 7.5 years out of 20 years. But that 7.5 year was not straight. It came in momentum, it went out of momentum, it came in momentum, it went out of momentum. And on a longer term basis, on a 20-year time horizon basis, it stood in momentum for approximately 7.5 years. So it is very important to identify the time in which you will stick with a larger cap name, because they don't tend to remain in momentum for a long period of time. So there are two ways of looking at this data. You need to own HDFC Bank for 7.5, 8 years when it stays in momentum. But at the same time, you need to replace it with the higher momentum name during the times of anti-momentum. So if you take that data and you see average of the large cap companies which stays in momentum, the average of the whole large cap space is anywhere between 4.5 to 5 years only out of 20 years. So it is very important and empirical to identify the momentum right in a large cap name and stand with it over a long period of time. But when the times of anti-momentum comes in, it is very important to get out of it and try to protect the downside.
Okay, and what are the specific parameters or techniques that your fund uses to differentiate strong momentum stocks from short term trends?
So we at Samco Mutual Fund have derived something called as care momentum strategy. In care momentum strategy, what we do is we identify momentum based on 4 parameters. The first one is called the cross sectional momentum, which is a guide how to select a particular company based on its own momentum score. So this is the parameter on which you will find which are the stocks which are staying in momentum. The absolute momentum strategy, which is which will enhance the portfolio resilience, so that compares momentum compared to the broader index. If the momentum of the broader index is broken, then it will use hedging as a proposition and try to protect the downside. E and R stands for earnings and revenue momentum, a top line momentum and a bottom line momentum. This is typically what leads to a momentum in a stock. So this is the care momentum strategy that we have built, that is proprietary to us. This is the algorithm that we have built to identify the large cap names which comes into momentum. And as I explained it to you, it stays for a longer period of time. So you need to catch it right. You need to catch it early, but also need to exit it when the downside starts appearing.
Right. But traditional large cap investing focuses on long term holding, while, like you mentioned, your fund actively rotates. So, why do you think this strategy is superior?
So, connecting to the same question that I am answering, see, please understand that the business cycles and the market cycles have shortened in the last 5 to 10 years of history. If you see, the business cycles are not longer, and the market cycles have also shortened. So, it is very important to identify the cycles of the market, particularly for large cap space, and you need to get in and get out at the same point of time. So, just to give you an example, this is let me give a disclosure before giving you this example. All the examples that I am giving to you on this particular channel is neither a buy or a sell recommendation from my side. These are just used for giving you an illustration in a particular direction. Now, if I was sitting in 2020 and somebody would have told me that Nifty will double, but your biggest of the wealth creators of the past decade, a Bajaj Finance or a Bajaj Finance or an HDFC Bank or a Reliance or a TCS will not make you money, or an HDFC Bank will not make you money. This somebody would have told me in 2020, I would have not accepted this. But this is what actually happened in the past 4 years, that the overall market expanded, the market cap of the Indian economy also expanded, but the biggest wealth creator of the previous decade was the biggest underperformer. So according to us, we think that just buying the stock and setting it for a long period of time will actually make money. So think of somebody who has bought that particular portfolio, who owns these companies heavily. After 5 years, also, they would have not seen any return. And this is why it becomes even more important to understand the short term trend between the long term trend of India. The long term trend of India is definitely going up. We all are aware of it. But the short term trend between the long term trend is what we need to capture through the momentum indicators.
Right. Like you said, identifying cycles is important, but many investors they associate momentum investing with high risk. So, what safeguards does your fund have to reduce downside risk during market corrections?
Yes, as you rightly said, momentum strategy is a high beta strategy. So associate risk will always be very, very high. Why we are one of the creators of active momentum as a strategy in the category. We understand the risk that it comes along with the strategy. So why are we shifting our entire focus of active momentum to large cap is because the hedging cost, the entry and exit cost, the hedging cost, and the impact cost of a large cap company is far lower than a mid, small, and micro cap company. So this is very, very important. And we have an in-house, as I explained to you, care momentum strategy. Absolute momentum stands for the relative momentum of the market. When the relative momentum of the market drops, we tend to get out of the stock and try to hedge our portfolios and protect the downside. This is what we do. And we have done it pretty well in this particular downfall also, if you see my other portfolios.
Okay, but Viraj, with large caps being heavily tracked by index funds, what gives an active large cap momentum fund an edge over passive options?
The passive options are always related to the market cap of the company. So if you see Nifty 50 or Sensex 30, they tend to build that portfolio of the companies which are high on their market cap, and particularly free float market cap. Now, free float market cap at this point of time is not an indicator which will tell you the wealth creation journey in the next 3 to 5 years from here on. So, momentum as an indicator is what is more important than the free float market cap of the company, is what we believe. As I just give you an example of a lot of companies from 2020 to 2025, they are the biggest of the market caps of India, but not the performance in the last whole cycle of the market, which started in 2020 2024.
Mhm.
Now, once people understand this particular phenomena, it is even more important to understand the importance of an active fund manager, particularly on momentum side, than having a passive portfolio which is dragging your performance to a larger extent.
So, one last question before we wrap up. What kind of investor profile is best suited for Samco Large Cap Fund? Would this fund work better for tactical investors, or can it be a core part of a long term holding?
This is going to be a core portfolio for a lot of people.
Mm-hmm.
For an entry level person, they want the stability of their return with the protection of their capital. So let me explain what do I mean. So stability of performance will come when the market will start rallying. We'll be able to identify momentum, and we will be entering the right set of stocks which where we can have a alpha that can be generated when the markets are going good. Now, when the markets are turning bad, the way it is at this point of time, it is very important to protect the downside also. So let me give you a like-to-like comparison. So Nifty 50, there is a 14% inherent CAGR that it has delivered over a long period of time, but with a 21% standard deviation. So for somebody who do not understand this, it's in a simple language, to earn 14 rupees on a Nifty 50, you are putting 21 rupees at risk. But still, it's considered good over a long period of time. So what hedging can do is that 21 rupees of risk can be brought down, and because of that, your proposition of earning will not remain 14, will go higher. Because you are losing less in a falling market, you tend to gain more in a rising market. So it is very important to understand for an entry level guy who is beginning in the investment philosophy, and also for somebody's core portfolio. For a core portfolio, as I started this particular conversation saying that the contribution of CNX 100 to CNX 500, it at its historical lowest level. So what do it mean by is that your contribution to the large cap is at the lowest possible level. Ideally, when I remember my journey as an investment student, I was being told to stay with the largest and the known company for a long period of time, and my proportion of investment to large cap was far higher than a mid cap, small cap, or micro cap. But at this point of time, because of the rally that we have seen post COVID in the Indian capital market, people have started ignoring the large cap space for a long period of time. So the core holding for an early level investor, or for somebody who is there in the market for a long period of time, should always be with the strongest and the largest company, and bringing an active momentum strategy for large cap, which is not available in the industry, is the right fit that we believe for them. And that is why we believe that this is going to be one of the best strategies that we have introduced.
All right. Well, with that, it's time to wrap up this discussion. Thank you, Viraj, for sharing your insights. It's been a pleasure talking to you. Thanks.
Thank you very much.